Hello traders, here's a new video now, and in this video especially we talk about Nasdaq stocks and also the Bitcoin, because these three markets especially are connected. Of course a lot of other markets too at this level. What we will talk about are the technical levels, possible targets for not only this week but also the next weeks. As you remember, I told you at the beginning of this month, in my last three videos especially, this month will be very volatile. February typically is the choppiest, the dirtiest, the worst volatile market months of the year. But especially this year, I can assure you every month will be now a dirty trading month. The reason is, of course, the presidency of the new US government, Trump, tariffs, just one word, and we will talk also about it. So what's happening today? Today is a very important day. We will have the prelim GDP data coming out. This is an annualized change in the value of all goods, services produced by the economy. If the number is greater than forecast, it's good for dollar. If it's less, it's not good for the dollar, but it's also bad for the stocks and also the crypto. Why? Because this will let the space open if the Fed will cut the interest rates. The probability of not doing it is at this moment below 45%, and the probability that they might do it at the end of the year, again, I don't think it. I don't think that they do it, because based on economical data and also forecasts and earnings of many companies, especially the tech sector, the bank sector is the next troublemaker. So, and this is of course a very welcome situation for the Fed, that they keep the interest rates high. Even I tend to say probably they are going to rise the internet or hike the interest rates again. And the reason is very simple. The Fed is a private organization. It's not belonging to the government. Fed is a private syndicate of bankers, and that's something very amazing, that they lead the world of finance. The world of finance should disconnect itself from this, I can say, not only me, but also a lot of other people of this criminal organization. They are hiding a lot of data. They are hiding a lot of manipulative, false data, especially last year. We have seen how many times data has been released, published, but not openly in some very questionable websites 30 minutes, half an hour before they have been to be released and sent out or given to some billionaires. Not only that, also they have been published a lot of data, and again 10 minutes later they said no, this is not false, these are false data, we need to correct them. And this is, to me personally, a very important fact, not to believe them, whatever they say. I never trusted them, and I won't trust them. Therefore, I'm warning you not to trust them. Whatever news you read or listen to might be serious, very serious. At the end, tell yourself, okay, good, we have read or listened to this news, and all right, but I don't trust you, sorry. Because your trust is something very valuable, and those people, those criminal people, are misusing and abusing your trust, gaining your trust, but giving you back shit. I'm sorry to say it, but this is the reality. See how the global economy is at this moment since 4 years, right? Initiation of COVID, of inflation, everything is house-made. This is all the plan they made. They want to enslave everybody. They want you to lose all your property. They want you to lose your freedom and. All right, so enough about policy now, back to business. So we have the prelim GDP data, then the very important unemployment claims, core durable goods orders, and then at 10 o'clock EST time, it might be in Europe, I think something about 4 p.m., we have the very important pending home sales and natural gas storage data. This is very important again for the next tariffs. Why? House home sales pending, for example, are very important for Lombard wood market. And if the prices of that commodity react terrible, meaning skyrocketing, and also vice versa, it will also impact the US government to put new tariffs on Canada. It was very predictable that Donald Trump will again take back the tariffs, to delay them. And this is now maybe a code you can use for the rest, not only of this year, 2025, but also for the next 4 years to 2029. This is the game, guys. If you understand this secret code now, the code is Donald Trump on Thursday night and Friday. If you remember, I made a special video, where I mentioned that the Wall Street, and to Wall Street belongs, of course, the US government too, and a lot of other governments members worldwide too. Why? Because they have their monies in the Wall Street. They will announce very important news always at the weekend. Why at the weekend? Because especially the futures markets are closed, and also a lot of other markets. Some CFD markets, for example, crypto markets, there are 24/7, but we are not talking only about them. So at the weekend, they let out the very important news and data. Do you remember? It was, I think, about the attack of Iran to Israel. The Iran announced publicly, we attack you in the next days. And what happened? They pushed the oil price until Friday close. And then at the weekend it happened. And then they said, okay, diplomatic talk. But the Wall Street was selling the market, a lot of private investors buying oil, and the market crashed then on the next Monday and Tuesday, and vice versa. A new follower on my Tradingview. Thank you very much. By the way, if you are in Tradingview, follow me also on Instagram. The links are below the video. Subscribe to this channel, share this channel, and also like it. It's good for the algorithm. Thank you very much. All right, back to business. Also, you need to go back to my videos. I think there are those videos with Iran and Israel flags, Iran war, Iran-Israel war, something about that. And listen to that video. I mentioned it. And especially, this is the game. So Donald Trump is punishing with the US economy, global economy, his own enemies. and especially those enemies who have been or speculating on bearish markets, especially being bearish in S&P, in Nasdaq, and so on. Therefore, he announces something positive, the market runs up, his enemy is losing money, and after an extended of that long or short squeeze, the enemy starts to buy the market, and then he says just tariffs on Japan, on Mexico, on Canada, on Iran, on Europe. The market crashes down. The enemy loses again many billions of dollars. We are talking here about George Soros. We are talking about Warren Buffett. We are talking about many other elites who especially been fighting Donald Trump during his last government time. So especially 2019, 2020, this is a prior to war. And as trader, you can make money, but it's very important while these two sides, Trump and his team and his enemies, are shooting each other, you never, ever want to be in between of those lines because they hit you. So you need to stand aside and have patience and then take action when the market starts to run, right? And this is the game. Thursday night, Friday night, he says something, new tariffs, and exactly like he did again, he said, for example, that we put massive, he's not going to stop tariffs. The market fell. 2 hours later, he said, okay, I'm going to delay another month the tariffs for Canada and for Mexico. What happened? Mexico peso, Canadian dollar got boosted after Trump delayed these tariffs. That's the game, guys. If you check this out, then I'm very, very sure you will reveal all those secrets. And of course, the Wall Street is making money in between. So the same the Federal Reserve is doing, right? So a lot of, government fed clowns talking in front of microphones. Nobody want to listen to them. Nobody want to see them. They tell you some narratives. We don't care about what they see or tell because that's a private organization. But there are some dooms in the market who drive the market, scalpers, right? So we see here in the Nasdaq chart, especially, if you see, we have a lot of ups and downs, right? Very terrible market. So for long term, of course, a lot of long-term traders, especially hedge funds and especially CTAs, for example, especially private investors with big money, commodity pools, large speculators, and so on. Banks, of course, government, and so on, they are trading on and speculative, of course, on long-term trend. The problem is with trend following that you should, of course, follow the trend or the price trend. But the problem is that you get, especially in these times, your entry signals very, very late. And if you are then in the trend and still in profit, the market then makes then these moves like this, as you can see. You enter the market, for example, here, not here, but a little bit later, maybe here. So then you pass this very big move. We are here on daily chart. And then after that, you should, for example, have been taking profit here. The market is still here and you even don't have any exit signals. What will happen now? The market will come down again to this level, something around here, and you need to give back all these big profits. We are here on daily chart, and you see that this is very terrible, right? So that means the technical analysis, nearly every technical analysis indicator will suck up here, and I know communicating with a lot of traders also in the chat, and I see it also. Both are suffering, the bulls, the bears, and at this time it's not anymore important to me to which side they belong, because all of them are also human beings. So very important is that you need to understand what is happening behind the markets, behind the closed doors. And therefore, there is a very good indicator you should use, and this is the COT report, the COT report, the Commitment of Traders report, which will be published every Friday afternoon. And that's exactly is telling you for each futures market how the positioning of the big boys are, right? And this especially you need to keep care of. And we see here 3 lines. The green line is for so-called small speculators. The blue line is for the commercials, and the red line is for the large speculators. What do you think? Who has more odds in the market? Just maybe you can stop this video to think about it. The so-called commercials, then the speculators, and the large speculators, and the very interesting small traders. The answer is easy. The commercials have here the biggest chance, the blue. Why? Because there are producers, there are those with very, very big money, farmers, producers of products, whatever, and they get also the margins to hedge themselves, to protect themselves at the markets are much more lower than, for example, other traders, and they have better network, better information. They exactly know what will happen in 1 year, in 2 years, much more sooner than anybody else. So, meaning, if they are, for example, long in Nasdaq, we can see it at this commitment of traders report, COT or COT report, and then smart traders follow these guys, right? The other one, the large speculators are, for example, as I said, the hedge funds, the commodity pools, the CTAs, then BlackRock and so on. These are the large speculators. Of course, they have also smart traders, but they still, with their financial power, billions of financial powers, what they have, they need to follow the rules of the commercials of the market. The commercials are so strong, so powerful that sometimes only a few guys rule the whole market, or some markets. They have a so-called oligarchy of the market because there are the commercials, and if they are wiped out, then this sector of the economy will be destroyed forever, and of course it will impact the lives of many, many people, billions of people worldwide. That is this space, this amount of power, financial power these guys have. So you don't need to ignore these guys. Instead, you must follow them. And we see here, this is something very amazing. Each time the red line, each time these large speculators, for example, you have seen or you're reading, JP Morgan is saying oil is going to 150, Goldman Sachs is saying that gold is going to 10,000, BlackRock is buying EFT and saying Bitcoin goes to 150K or higher. These are large speculators, guys. Since how many years, how many months are you hearing every day Bitcoin is going to 200,000, buy Bitcoin, buy Bitcoin, buy Bitcoin? Where is the price of Bitcoin now? 88. Last year it was 64. And it's threatening that the market comes back to 62 again. And guess what? Even with their financial power, these guys are still wrong. Why? Because they are buying every time the market makes a breakout, they buy the market. So they make, of course, money by buying the breakouts, even false breakouts of the market, of the trend, but they make money over time. If the market coming back, they buy much more, so their positions are very, very large and they have a lot of money, right? But the typical trader, for example, following those rules, they will suck some way because you don't have enough financial power, right? But also their financial power has a kind of limit. If you remember, for example, Lehman Brothers or long-term capital management, 2009, 2008, has been crashed. Billions of dollars of this hedge fund has been crashed. Can you remember maybe FTX, Sam Bankman-Fried, who is now at prison? $1 billion crashed. And these guys are the large speculators. And now you might ask yourself, okay, how is it possible? They have billions of dollars, but at the end they make losses. Yes, the answer is yes, they do. Why? Because they have been building a lot of positions. So at the end, they have very, very large positions. We are talking here about having positions that are worth of $1 billion. And even the market runs against them. They can't compensate as long as they have enough money. They are not margin call. But some way they say, okay, if at this stage of the market, we take on the market, for example, they are bullish, but the market is falling, right? The same, for example, also like this guy, Michael Saylor, right? He is still in margin call in loss because he has been buying above $100,000 Bitcoins massively, of course, with debt. His own company is now minus 35% margin call, the MicroStrategy, and also the new company, or he has also changed the name to Strategy, is also margin call. And these people don't sell it. Why? Because if they sell and take the loss, they lose everything. So what will happen if the market crashes much more deeper? Of course they crash. That means if they take the loss, they lose. If they don't take the loss, they lose too. That's the problem, right? Therefore, these guys are the worst traders, and therefore they making in 90% of time bad decisions, meaning in 90% of time they are wrong. Okay? So meaning if the market is going to fall, what do? They buy. If the market is going to rise, what do? They sell the market. In 90% of time, these guys, BlackRock is wrong. The banks is wrong, right? Hedge funds in 90% of time are wrong. Go to TradingView and find, for example, some EFTs, right? Of Vanguard or whatever. See the curve, how much profit you might be having made in the last 4 years with those ETFs. Nearly nothing. Zero. If you would have buying those, at the end you might be at this moment in loss or plus, maybe plus minus zero, something around that, right? It is not rising, it's going sideways since 4 years, ETFs. And this is the dream they are selling to a lot of people. Buy ETFs, you will have a good life, you will be millionaire and so on. Of course you can make it, but I show you now how you are going to do that. Well, you need to find then your COT or COT report, and you need to make exactly the opposite what the large traders, not the large speculators, not the commercials do. The large speculators are these people with red line. If they buying something, what do? You do exactly the opposite. That means you sell the market. That means you see, for example, here now, the large traders are buying Nasdaq, and then you go to the Nasdaq chart, and you see Nasdaq coming down. That means you wait for a short opportunity with technical analysis, for example, stochastic, RSI, if you use maybe moving averages, whatever. Also trend lines, right? For example, in Nasdaq especially, trend lines work very nice. You need only to say, okay, to look back here, February, okay, above 10,000, right? Above zero means bullish. Large speculators, 10,000, okay, they are bullish. We sell the market, that's all. And then you need, for example, to draw your trend lines, and you just wait confirmation of the market with stochastic or RSI, and you sell the market. So not only that, the market has not only the large speculators are bullish in Nasdaq, meaning definitely the Nasdaq will crash down. Also, if you look at the market technical levels, we see here many times the Elliott wave traders, the Fibonacci traders may have a very terrible time this time. They have not being good in this market, buying, selling. If they have been selling the market, they might be in very, very big profits, all right? That means each time the market goes back to the last levels, for example, this is a last level here, you go here, you wait that the market comes down. We see here also we have a gap in between, right? So the market comes back to this level. What do? You wait for RSI, for stochastic, sell signal, go short. Short the market. And you do it, you can let the trade run. How long? Until the large traders start to sell the market. When they start to sell Nasdaq, what do? It's time for you to take profit, to stay out, to wait for bullish confirmation of the market, and then you go long. Why? Because you had better have deep pocket. Also, it's, for example, true that the commercial traders typically buy at bargain levels. This is number one. And they sell at premium prices. You may not be able to afford every bargain, especially as they become bigger bargains. So that means that the commercials, right, the big guys, the really powerful guys, so powerful, much more powerful than Donald Trump or the whole US government and NASA and Pentagon and US military together. This is the real power of the commercials, right? And these commercials are negative feedback traders. That means they typically buy on a scale down and sell on a scale up. They need to protect themselves, right? What they produce. That's very important for you to understand. So they hedge their positions. And this hedging is their insurance. But the commercials, these guys, have double protection from the losses that can amount from holding a position through an adverse move, meaning if the market is running against them, they are hedged, they make a profit, right? They also have a primera, and this primera, right, before they get into market, they make a fixed price. So in whatever happens, they are protected, and whatever happens, they come out with a big profit out of the market. So they have a double belt, right? And with the belt and suspended security of deep pockets and offsetting cash positions, these commercials can add to a long position on a scale down or a short position on a scale up, meaning if the market is running up, they hedge themselves short. With, of course, near impunity, while margin calls are doing in lesser traders. For example, the speculative large traders, the small traders, traders like you, like me, right? And this is the reason that the guys, the commercials lead the market, and we don't know what information they have. All we can see is the court report, right? And at this moment, we see here the commercials, the blue line, are short, meaning we follow tip number one, follow always the commercials. And number two, do the opposite of what the large traders do. So you see the large traders are bullish. That means we are bearish, right, in Nasdaq. Tip number one, commercials are bearish, follow always commercials, means we are also bearish like the commercials. And we see here also the volume is confirming, confirmation, right, is falling, and also red. And this is about Nasdaq, guys, right?